Hello viewers, welcome again to the Village Boy Academy, where we give you business tips that can make your business run better and more profitable. For a while now, I've spoken about the need to keep records, the need for businesses to keep adequate, timely and complete records. So you might be wondering, what kind of records should business be keeping? Irrespective of the kind of business you are involved in, which are usually categorized into two broad categories. One, whether you're in production, it could be small scale, it could be no matter micro production, whatever kind of production you're doing, or when you are ready service. So businesses is either giving out product for exchange in terms of value for money, or you render service for exchange of value. So irrespective of what you are doing, the kind of business line you are, out of these two broad categories, you need to still keep record. So what kind of records are we talking about? Number one, production records. So when you are into production, you are into manufacturing, even if it is the least complicated kind of manufacturing that you are doing, even something as something you do in your backyard, cottage industry as it were, you need to keep production record. And when you are keeping production record, what are those things, what are the elements of that you need to find in production records? Of course, you have to have your materials. What kind of materials are you using for product ABC? You can have also multiple products. So business will have multiple products. So you have to have a record of the materials that are used for each product. You have to have the record of the mix of that of that materials. What percentage of material A, B, C, D will be required to produce a unit of A unit of B, a unit of C products, just for labeling purposes. Then what is the process? There's some, you have to document this. Some production may require 2 processes, some may require 3 processes, some may be 4. You have to recommend this, you have to document this process so much that even when you are not there, somebody can pick the record and be able to run the business when you are not there. Then you have to also have a record of the yield analysis. I've spoken about this in the past. So if you are running a restaurant, for instance, if you cook rice and you buy a 50 kg of rice, so and maybe you do a packaged food from there, you should be able to document how many package of food you can derive from a bag of rice. And I've also said in the past, it doesn't have to be consistent because it can hardly be. So what you do is to do an average over time. For instance, if you maybe within a period of 1 month or 2 months, you'll be able to determine the lowest yield and the highest yield. So you cannot have a mid level. So okay, at the very worst, I get this number of package in a bag of rice, and at the very best, I can get this. Yes, in between those two broad yield, we give you what to expect from any bag of rice that you use, to cook for customers. So what this does to you is like it explains it also help you with your various analysis if you are going to a kind of advanced costing. But you have to have a record of this. If you don't have this record of this, you cannot even do any analysis, because what will be the basis of doing that analysis? Production record is very important. If you are in the service industry, if you have maybe 2-3 types of service that you render, you should also have that record. Maybe the how you charge for each service, maybe on an hourly basis or monthly basis or contract basis. Service ABC, I charge this per hour. Service if you are doing a week, or we are doing it as a contract. So you have this record. Then you have your second record. You have your marketing and sales record. Marketing record is when all your advertisement, all you spend, whatever you do on advertisements, all the channels, development, I tried not to make this too sophisticated, has to be under the marketing record. Then the sales, your sales customer, Of course, your product, if it is 1, 2, 3, 4, so how do you distribute it? You have list distributors, your list of distributors should be there. You have those direct buyers, you have the list of your buyers there. If you have those that you sell to on credit, the list of your debtors should be there on your sales record. Then returns. When the goods that are returned from customer because they are damaged, or because they are supply in excess, or because the customer no longer needs them, so he has to return them. So the sales record should keep this. There's some of this record that can be kept by more than one department, so that you, especially if you have the luxury of having an audit, you can now compare whether the record kept by one department tallies with the similar record that is kept by another department. It's not necessarily duplicitous, it's just to confirm, because two independent record should be able to corroborate themselves, and if there is a variation, that could also enable you to figure out why do we have variation. Then you have the stock record, or sometimes we call it inventory. So inventory record, which may include your stationery, what you use. You have pen, your biro, your papers, your jotters and everything. Your stationery should do that. If you have computer, your printing paper, your ink and stuff like that should be included in the inventory stroke stationery record. You should have this record so that you know. Especially now with this stage of rapid inflation, you should be able to decide, okay, we bought this for $S last month. Today we are buying this. Next, and all of that. You have to keep this record. And then we have the, finance and account record. This is where you're actually able to measure your performance at the end of the day. So what kind of record do you keep under that? You are talking of keeping your bank statement. There are many of us, many businesses, they don't even collect bank statement, let alone keeping it. And when you collect your bank statement, endeavor to reconcile them. You reconcile them with the teller or the deposit slips, and your withdrawal through check, if you write check. But in these days of electronic transfer, because most of the time also the bank send you confirmation. But you don't have to wait for that confirmation. So if you are doing an electronic transfer, you should have a register. It could be by paper, it could be on your computer system. Whereas you indicate the date you are making the transfer, the payee, the recipient, the person you are paying to, then the amount, then the description. So what are you paying for? And of course we said, okay, most businesses you have what to call your account codes, where you break down all these things to kind of there are various elements. So you now code it, as it were. There are so many software that even people who are not too knowledgeable in accounting can at least do the punching. You keep the record. Yes, you may need accountants or a good consultant to help you interpret the information there, but these are things you can do basically on your own. So those records, when you get your bank statement, you now compare with what you have recorded by yourself, which is those we call it cash book. It's still cash book, literally speaking. Then you also, from the bank statement, you extract your bank charges, which you may not be aware of until you receive the bank statement. And so these are the reasons why we keep this record, so you know that, okay, for instance, you may have been wrongly debited for a transaction that did not occur emanate from you. So you have the opportunity to go to the bank to query, to ask for further question. I'm seeing this strange figure in my bank statement. What is it about? And stuff like that. Also, if you get a strange credit in your account, it's also good to go to the bank and ask for clarification. Don't regard it as a windfall and spend the money that does not belong to you. And if the banks get to know later, of course they will take it back, and that may put you in a very difficult situation. Then the debtors record also be kept in account. So the account department must know those who are owing. Apart from the sales, record which shows those who have been sold on credit. The account department also should have, your account record should show this is the number of people that are indebted to the business. Of course, you have to put their name, the amount owed, what was bought, the date it was bought. All this will be part of the debtors record. The same thing with creditors record. If you buy on credit from your suppliers, you have to have record for them. So this record will tell you also, this is also called, I bought from so vendor or supplier, the dates, the goods, the description of the goods, the amount. If you are paid part of it, amount paid, amount to balance, and the condition, for payment. Usually there's a condition for payment. So it could be 20 days, it could be 30 days, and all that. And of course, if there is possibility of a discount, some will say, okay, I'm giving you a 30 days credit facility, but if you pay, within 25 days, I will give you a further discount of 2 or 3%. So this record will enable you to know whether you want to take advantage of that window of opportunity that the vendor is giving to you. So you have to keep your debtors record, your creditors record. And if you sell on cash, you have to keep a record of cash you sold every day. You are selling every day. So then, what do you do with that cash? You can also keep another record. Do you take all the cash to the bank, or do you spend from the cash directly? A record should be there to show all this. This is what makes it easy for somebody if you want to audit your job, your business. An auditor will come in, will not just look at your bank statement and all that. An auditor will look at all these records. Because it is when auditors look at this record that they can say, okay, this business, the record that, the underlying record, financial statement that this business has presented represent the true and fair, of what has happened during that accounting period. Usually with this, you break down year or period into accounting period. So it is then the auditor can say, okay, yes, they did what they're supposed to do. Then when you want to test the going concern, you look at other factors like, okay, how much creditors, how much are you in the creditors? Are you at the mercy of creditors? Can they call for creditors, wind down and stuff like that? Or how much of your money is tied down in the hands of debtors? How long have they been? What are the possibilities of recovery? You first look at, okay, doubtful debts, then before the one that may become beyond doubtful, say, okay, this is a bad debt, so write it off. But if you don't have underlying record for this, you may not be able to take adequate decision for them. One of the most beneficial effects of keeping records, good records, complete records, timely records, and relevant records, is that it enables you to take good decisions. It enables you to measure the direction your business is going through. It enables you to measure the performance, even sometimes of your workers. If you keep record about, okay, we'll give you so bag of rice to cook, and this is the amount of play we expect you to make there. If the worker comes and look and is giving you a figure that is far less than that threshold, you'll be able to know. But with that record, you'll not be able to find this. So again, you want to do your analysis. If you want to go deeper into costing, you want to talk of various analysis. You can't do various analysis with no records. It's not just possible. Then in these days that there are some issues with bank statement. During our time, earlier time when we started accounting, bank statement is one of the authentic documents you can have, almost error-proof. But it's not look at it like that. For some years now, we have had to battle with the correctness of bank statement. So you have to go. Most of the time they don't give you. You go to ask for it, and you go through it by way of reconciliation, and that timing, you can measure your cash flow statement through that. So there are so many benefits you could derive, from keeping good record. But make sure your record is complete, make sure your record is adequate, make sure your record is relevant, make sure your record is complete. And when you do this, you can measure your performance, you can measure your profitability or otherwise. You can also plan. You can, from your underlying record, you can draw budgets for the subsequent years, subsequent months, subsequent periods of running the business. And through that, you can also make good projection of what your business will be in 1 year, in 2 years, in 3 years, in 4 years, and 5 years. So because of all this reason, we know that we cannot overemphasize keeping record. So I have grouped the kind of records into 4 now: production / service record, marketing / sales, stock, inventory / stationery, and stationery, then finance and account records. And all these are the backbone of running any business. The sophistication of record will depend on the sophistication of your operation. But I can tell you there are people who can still do this with just a notebook. Of course, you have different, if you have notebook, you have different pages for each of these elements. Or some may say, okay, I want to keep all the record of what happened in a day, together, which means you combine all the elements in everyday record. But that will be very cumbersome in terms of extraction. So it is better to separate them, that you know what you are doing. And if you have, Excel, you know how to use Excel very well. Even without designing it, you can create different worksheets for all these records. But one of the critical principles of accounting record is like the date must be there. You must indicate the date the transaction occur. And of course, for anything to have meaningful meaning in accounting, it has to have monetary value. So if you say you sell, or you sold rather, a crate of 5 crates of egg, that is information, that's a record. But that is not a complete accounting record. The complete accounting record is like date, description, crates of eggs, unit 5, amount per unit $5, total. You multiply the unit by the unit. So these are the things you should pay attention to. Keeping good records help you to evaluate your business very well. It helps you to aggregate all the information in a compact and easily understandable manner. It helps you to evaluate the profitability of the business. It also helps you to evaluate the going concern, which is very important for accountants. So how long can this business be in existence? So those are the kind of few things that you derive from keeping good records. So good records, you cover all area of your operation, so that you can have your past history, past record. You can also use it to predict what the future will be like. So thank you as you try to start keeping good record, because good record will take care of headaches from you, as we have had in this video. Thank you. Until I come your way next time, I remain your village boy.